But Mahanagar Gas saw a nearly 8% up move yesterday after its earnings. The EBITDA margin has come in at a 7-quarter high, led by price hikes. But there is a miss on the volume front, with the company seeing a 1% sequential dip. Ashu Shinghal, who's the MD of Mahanagar Gas, joins us now to talk about that. Ashu, thanks a lot for joining in. Appreciate your thoughts. Can you tell us, are there any more margin levers? I mean, it's been very strong this time around. It's a 7-quarter high. But can you do better than this? Are all the price hikes factored in already, or could there be more?
Good morning, everybody. Thank you for this conversation. See, we already have a very good quarter, as you mentioned, 7-quarter high. And we will see how the prices roll out for LNG. As of now, the LNG prices are low. There have been some positive discussions and decisions from the government of India regarding Kirit Parikh recommendation. And we have passed on that benefit to the customers. But we will see how the crude prices roll out in the next quarter or so, and how petrol, diesels are priced. Accordingly, we will adjust our CNG prices to see that the margins are maintained, as well as growth for volume is also there.
Right. Ashu, good morning. The general expectation is that LNG prices will tick up from here, but maybe we won't see a repeat of what we saw last year. Just a quick bit on volumes, Ashu, if you can comment. That seems to be where there is a bit of a disappointment. So, I mean, quarter on quarter, fine. I mean, they're down about 1%. But if you look at the second half of FY23 as compared to the second half of, as compared to the first half, volumes are down 4%. Could you explain what happened? Did high prices hurt demand? And what's the outlook?
You're right. Partly what you said is absolutely correct because of the high prices around 89 rupees per kg of CNG. And that was perhaps a bit dampener for volumes to pick up. But year on year, if we see, we are 14-15% high from 3 MMSCMD to 3.42 MMSCMD this financial year. So going forward, once the prices have been rolled down to 79 rupees per kg, so almost 10 rupees have been reduced from 89.5 to 79. 2.5 was reduced in February, and around 8 rupees were reduced in April first week, after Kirit Parikh recommendations were adopted. So this should be impacting. It takes some time for actual having impact on the volume. So we expect that this half and this whole financial year we should see some uptick on the volume side.
So the entire, it's been passed on, 10 rupees, right? All of it is passed through.
8 rupees were the impact due to Kirit Parikh, and 2.5 rupees when the HPHT gas volumes were allocated. So we were the only company to reduce prices in 1st of February to pass on that benefit, and also to have an eye on the volumes in the coming years.
Right. Ashu, let's crystal ball gaze a little bit, because, analysts believe that while the first half of this fiscal is going to see the momentum continue, just wanted to understand the second half of this year. There could be some risk with regards to reversal in LNG prices, also a cut in diesel petrol prices, given the sort of state elections that we have. In light of that, I wanted your thoughts on, how the business will pan out, especially with volumes and margins. The last quarter you had, EBITDA per unit coming in at 7-quarter high. Does that sustain going forward with all the cuts that you are announcing? And how will this equation between volumes and margins pan out on an entire year basis, and the second half in particular?
See, second half, as the trend goes, you might have, if you're keenly watching the LNG space, the prices have fallen dramatically since last 4-5 months. They were ranging in $24-25 per MMBTU. Now they have below $10 per MMBTU, the spot prices. So I don't think that the trend will totally reverse in coming 6 months or so, because now the winters are over in the Europe. So the demand will be slightly on a lower side, and the prices should remain at a low level.
Okay. Oops. I think there's some issue with that video. Ashu, can you hear us? All right. We think have an issue with that link. We'll just get back to that in a bit. Mahanagar Gas. Okay. Ashu, I think, yes, you were making a point. Would you like to finish that? I don't think he can hear me. Okay, we'll get back to Mahanagar Gas. Yes, you are. Go ahead.
Sorry for that. I think I was saying that first half is more or less predictable, because last 4 months the LNG prices have come down dramatically, and that trend is expected to be continuing for some more time. Not that the prices will go further down, but they will be remaining in the range of $10 per MMBTU from $22, $24, which they were 5-6 months back. The second half of this financial year is also expected to be that prices will be in control.
So could you put numbers to what you're saying? Could you give us a volume guidance for the year and also the margin guidance?
Yeah, the volume-wise, we expect 5 to 6%, and if the year goes good, we may see 7 to 8% volume growth. Margins are expected to, if you see last 5-year trend also, only barring 1 year, we have been in the range of 8 to 10 rupees per kg. So that per SCM, sorry. So that is the trend we expect to take, right? This current financial year, we are around 9.5 rupees per SCM. So we expect that the margin should be in the same range, 9 to 10 rupees.
Okay, so margins at 9 to 10 rupees and volumes, you said 7 to 8% growth is what you're looking at in FY24, correct?
Right.
Okay. Can you tell us, you had made the acquisition of a CGD company last quarter. By when will that integration be completed? And are you looking at any other inorganic moves in the next 12 to 18 months?
That acquisition is subject to PNGRB or the regulator's approval, which is expected to take place somewhere in October or November. There is a 5-year lock-in period till September end. So we expect that by November, the transaction should complete, wherein we transfer the money and the shares will be transferred to MGL. With respect to other inorganic acquisitions, right now we want to consolidate this one and also scout for other opportunities. But it takes normally some time to actually do all these due diligence and other activities. So we are looking at diversification in other areas also besides inorganic acquisitions.
So this diversification in other areas, what would it be? Because, some of your peers are expanding into areas like EV chargers, etc. Is that a space that you're looking at? Because that space is booming now. And anything else that, that comes under the ambit of diversification for you?
Yeah, we are looking at 3-4 areas. One of them is, as you rightly mentioned, electric vehicle value chain. Maybe some equity participation in some of the companies who are starting in this sphere. Charging also we are exploring. Besides this, we are also in talk with BMC for a CBG plant in Mumbai city. Other than that, in manufacturing of CGD equipment somewhere, in the long-term haulage of LNG also we are exploring. So there are several areas we are looking at besides our core business of CGD in expansion or inorganic, if something is there on the anvil.
It's rather interesting because, everyone's looking at cheaper fuel alternatives and CNG itself is one of them. Just wanted to know whether the conversion rates have sustained in the first quarter or not. On an average, you do anywhere between 15,000 to 17,000 cars per quarter converting to CNG. Has that continued?
Yeah, you're right. On the last year, 65,000 vehicles were converted. So on an average, around 50. Initially, in the beginning of this financial year, the conversion was low, but it picked up as the year went on. So we expect that this quarter and the next quarter, the numbers would improve. And this financial year also, we expect around 70,000 conversions to happen. 72, if things goes well, maybe slightly higher than 70,000.
And what does that mean in terms of customer additions for both your PNG and CNG vertical? What are you targeting this year?
We normally add, like this financial year, we added 3 lakh PNG, domestic PNG connection and almost 140,000 burning conversions. Burning conversions means when they start taking the gas in the domestic PNG. And as 65,000 vehicles were newly added. So we have almost 9.5 lakh vehicles and another 60,000 are added and almost 22 lakh connections. So these are the overall numbers, around 3 lakh domestic connections we add every year. The trend is expected to continue this year also.
Ashu, in FY23, you saw 14% volume growth. You're saying in 24 we'll see 7 to 8%. I mean, is this kind of the level we will see for the next couple of years, or will this Unison acquisition, once this is integrated, 25 onwards numbers should look much better?
The reason for 14% growth year on year was primarily because of COVID. The sales were low in the last financial year. So that's why these 14% is on a higher side. But if you see last 7-8 years CAGR, we are in the range of 4 to 5% CAGR. So that's why I said that in this financial year, the COVID impact is over. So we expect 7 to 8% growth on a optimistic side. Otherwise, 5 to 6% is the normal trend.
Ashu, got it. On
Unison, the volume was very low, 0.1 MMSCMD. So that won't have much significant impact on overall kitty of MGL. Besides that, company is expected to be a subsidiary mode. So consolidation, yes, the numbers will be adding up, but physically volumes will be separated.
And on operating profits, I mean, if you can give us a number, FY23 EBITDA grew 28%. What would that number look like in 24?
Similar numbers, like 1200 CR was the EBITDA for this year, and it grew at 28%. But again, we don't expect that the numbers will grow to that level from this year performance. So they will be in the similar range, maybe some growth of 5 to 6%, or we don't know. We can't say. It all depends on how much growth we can capture the new market in terms of CNG becoming more attractive. So there will be a balance between the profit numbers and the volume growths.
All right. We let you go on that note. Thanks a lot for joining in. I just want